Discuss the Nigerian Stock Exchange. It's been on an absolute tear these past few months. Stock exchange is up about 27.7%, almost 30% up year to date. The market did pull back a bit on Friday by 0.86%, a little bit of profit taking, but still. Last week, the market did about 12%. So far this year, the market is still on the rise. It's above 35,000. Well, actually, it's dropped a little bit below 35,000 points. That's the all-share index. But how does an investor manage the exchange? Is it a good time to go in? What sectors are doing well? Joining me to discuss this is the Managing Director at FBNQuest Securities, Fiona Ahimie. Fiona, good morning to you. Thank you so much for joining us. What is behind the bull run that we've seen on the Nigerian Stock Exchange so far, Fiona?
Hello, Otis, and thank you for having me. So basically, what has driven this activity in the Nigerian capital market is as a result of what our fixed income environment is doing right now. So in Nigeria right now, fixed income instruments are offering you T-bills at 0.5%. Bonds are trading lower. Your money in the bank is yielding you 1%. So there's excess liquidity as a result of maturing investment in these fixed income assets, and investors are looking for alternative investments that will give them superior returns. So equities has attracted some of these inflows, and this has shown in the way the market has rallied in the last couple of months.
It's incredible stuff. Thank you for that. So would you call these triggers behind this bull run, can you call them fundamentals, or are they not fundamentals? How would you describe it?
Okay, so the real initiator of this particular run is because of the excess liquidity we have in the system. However, a lot of stocks still have fundamentals that are supporting the levels they are trading at. So for example, look at some of the big banks. They are trading at price to book. For example, Zenith Bank is trading at a price to book of 0.8. Typically, Zenith Bank trades at a price to book of 1. GTB is trading at 1.3, typically is at 1.8. So fundamentally, some of these stocks are very strong and support the current valuation. But the real factor that has moved the sector or has moved the market is the liquidity in the system.
All right. Now, you mentioned a couple banks there, and they've, capital appreciation plus their price to book. I think the dividend yield is doing pretty well as well. So that's the financials. That's financials. But have all sectors benefited from this run, or can you point to specific sectors and say, okay, it's financials and I know industrials that have done well?
Absolutely. So the move has been across sectors. If you look at the indices on the Nigerian Stock Exchange, for example, if you look at the year-to-date figures, most of them have done well except the oil and gas sector. However, if you look at the markets for the last 2 months, you can see that all the sectors have done very well. So the banking sector is trading lots of 22%. The industrial is around 40%. The oil and gas is around 17%. So they have all kind of partaking in this rally. And that is because these companies all have some strong fundamentals, and we don't have a lot of companies listed in Nigerian Stock Exchange. So whenever there is a rally, mostly every stock kind of benefits. The large caps, the small caps. I was looking at Transcorp trading at 60 Corp, I think about a month ago. When you look at Transcorp today, during the rally, it's trading at 1.20 naira, touch 1.30 naira. You look at other stocks like UAC was trading at 55.9. It's trading north of 8. First Bank is trading from 5 naira, trading of 8. So it's not just the banking sector. Look at Dangote Cement, for example. Dangote Cement has moved up to 200. MTN traded at some point at 90. Right now, it's trading at north of 150. So basically, all segments have benefited from the move.
All right, so it's the old adage, a rising tide lifts all boats, or something to that effect. Is this run driven by local investors? And if yes, what's keeping foreign investors on the sidelines? And what happens if and when they return?
So data from the NSE as at September showed that local investors accounted for 70% of activities on the Nigerian Stock Exchange. And this is not going to change too much from what we are going to say when they bring out the numbers in October. And that is because what is really propelling this move is excess liquidity from investments in fixed income instruments that investors are looking for alternative or more superior investments to go into. The foreign investors have pretty much been on the sideline. Doesn't mean they are not participating at all. They are participating, but they are not their usual representation on the NSE. And that is as a result of the dollar illiquidity that is being experienced. Sometime in 2016, we had some shortage of dollars, and investors were unable to take monies out. That is still being experienced right now. A few investors have sold and are unable to take out monies. They're actually on a queue trying to get monies out from the CBN, and this kind of dampens the morale when you are making investments and you're even making money and you don't think you'll be able to take that money out. That has dampened investors, foreign investor kind of sentiments at the moment. So pretty much they are just about 30% in terms of participation.
Interesting. So it's the locals, it's the local investors that are carrying the baton on the exchange. Is this run that we're seeing, Fiona, is this sustainable as we close out the year?
So the main factor that is actually propelling this is the low yield environment plus the excess liquidity in the system. And as long as there's still maturing investments from the fixed income side that will have to find its way into something else, we think this rally is going to continue until, of course, liquidity kind of dries out or there's some other alternative investment that can give some kind of superior returns. Yes.
Indeed, yeah. There's been a lot of talk about how, deepening the market and getting more options there for investors. Okay, so we saw a slight pullback on Friday, but the ASI is still, at, almost at the 35,000 point mark. What are you telling investors with questions about whether they want to get in on the action?
I mean, so it's expected after the market has rallied so much for a while, you tend to see investors kind of take profits. So it depends on the category of investor that you are. There are speculators who just want to have a bit of an upside, beat inflation, beat devaluation, and then try to just take out the profits, whatever they have made. If, for example, you had bought stocks sometime around March and April, you've made upsides close to 100% to 80%. You've already beaten inflation, you've beaten the exchange devaluation. So, I mean, looking at your net return after taking those factors into consideration, what else are you looking for? But the problem is, what is the reinvestment risk?
Gotcha.
What else are you going to put money when you get out from the Nigerian stock market? So investors, depending on your category, if you're a value investor, there's still value in the market for you to harness. So you definitely want to stay back. If you're just a speculator, you just want to get in maybe 50%, 40%, that is decent return, and then you are out. So it depends on the kind of investor you are. We advise you.
Okay. So, do you have any specific? Okay, we looked at some sectors that have done well, and pretty much you said it was across the board. But do you have any specific sectors you think will perform well between now and the end of the year, or going into 2021?
Okay, so we think the banks will continue to do well. The banks have typically given them higher dividend yields. So we think the big banks, even the small banks are doing very well. And we think this is going to be sustained. The cement industry are also going to do very well. We see a bit of movement also into real estate. So instead of keeping my money in the bank, at 0 to 1%, I'd rather maybe build a house or something. So we see the people buying cement, and that has reflected in their Q3 results. If you see what Boa and Dangote Cement kind of pulled up. Looking at telecoms as well, MTN is doing very well. Stay at home has made data volumes to go up 53% in the last quarter report that it reported. Now people are going back to work, so we see that voice is also going to make a contribution to that pot as well. So we see the cement, consumer names is a bit tricky because purchasing power has not improved for investors per se. So that segment is also going to be a bit squeezed. However, because of the low yield environment, they are going to be able to borrow at a cheaper rate. And we see a lot of them coming to the market with CPs at 5%, at 6%, 4%, which is good for their books because now they are going to get some funding at a reduced rate, and that can help their margins. But we think most of the gains is going to come from the banking, the telecoms, telecoms, banking, cement, and of course, we'll see some consumer names. Another reason for
we're actually out of time,
some of the movements. Okay.
I appreciate your analysis. Sure. Fiona Ahimie, MD at FBNQuest Securities. Thank you so much for your time and taking us through the exchange.